Welcome to our channel, where we provide valuable insights and expert advice on finance and economics to help you become rich. We're going to be discussing what causes an economic recession. So, an economic recession is a period of time when a country's economy experiences a downturn. This is typically characterized by a decrease in GDP, an increase in unemployment, and a decline in business activity. But what exactly causes an economic recession? There are many factors that can contribute to an economic recession, and the specific causes can vary from one situation to another. Here are some common causes that you should be aware of. Number 1. Decreased consumer spending. One of the main causes of an economic recession is a decline in consumer spending. When people are feeling uncertain about the future, they tend to cut back on their spending and save more money. This decrease in consumer spending can lead to lower demand for goods and services, which can then lead to businesses cutting back on production and even laying off workers. Number 2. Reduced business investment. Another factor that can contribute to an economic recession is a decline in business investment. When businesses are uncertain about the future, they may be less likely to invest in new equipment, to expand their operations, or hire new workers. This can lead to lower economic growth and, ultimately, a recession. Number 3. Inflation and rising interest rates. Inflation and rising interest rates can also play a role in causing a recession. Inflation is the rate at which the general level of prices for goods and services is rising, and it can lead to consumers having less disposable income. And when interest rates rise, it can become more expensive for businesses to borrow money, which can lead to reduced investment and lower economic growth. Number 4. Decline in housing prices. The housing market is another important factor in the economy, as it can have a ripple effect on other industries. When housing prices are rising, it can lead to an increase in economic activity, as individuals and households feel more financially secure and are more likely to spend money. However, when housing prices are declining, it can have a negative impact on the economy. This is because a decline in housing prices can lead to a decrease in consumer spending, as well as an increase in foreclosures and bankruptcies. Number 5. Global economic slowdown. A global economic slowdown can also contribute to a recession. When the economies of other countries are struggling, it can lead to a decrease in international trade, which can then impact businesses and consumers in the domestic economy. Number 6. Stock market crash. One potential cause of a recession is a stock market crash. When the stock market experiences a significant decline in value, it can lead to a decrease in consumer confidence and a reduction in spending. This can then lead to lower demand for goods and services and a decline in economic activity. Number 7. Banking crisis. Another factor that can cause a recession is a banking crisis. When banks are unable to lend money or go bankrupt, it can lead to a reduction in credit availability, which can then impact businesses and consumers. That can lead to a decrease in economic activity and ultimately a recession. Number 8. Government policies. Government policies can also play a role in causing a recession. If a government implements policies that are detrimental to the economy, such as excessive regulations or high taxes, it can lead to a reduction in economic growth and potentially even a recession. It's important to note that these factors can interact with each other and intensify the effects of a recession. For example, a stock market crash can lead to a decrease in consumer confidence, which can then lead to a reduction in spending and a decline in economic activity. While recessions are a natural part of the economic cycle, they can still have significant impacts on individuals and businesses. By understanding the factors that can cause a recession, we can be better prepared to navigate through difficult economic times and make informed decisions about our personal finances and investments. Thank you for watching, and be sure to subscribe and check out our other videos for more insights on economics and finances.